Traders bet the ECB's rate cut floodgates are open, but can the bank keep up with the pace? Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Peter Devlin. Investors raised their expectations on quick-fire ECB rate cuts on Thursday after the bank's first consecutive rate cut in 13 years. President Christine Lagarde offered little pushback against market expectations, but did reiterate her belief that the Eurozone economy was on track for a soft landing.
The disinflationary process is well on track. The inflation outlook is also affected by recent downside surprises in indicators of economic activity. Meanwhile, financing conditions remain restrictive.
So quarter-point cuts at every meeting through April are almost fully priced in, but are markets and Lagarde on the same page? To help answer that and more, I'm joined by Jan von Gerich, Chief Analyst at Nordea. Welcome, Jan. Thank you very much for joining us. So starting off with your reaction to the ECB, you think that another rate cut at December looks likely. So amid Lagarde's non-committal language, will anything derail your expectations?
Well, the data would need to be really strong for them not to go in December. But at the same time, I do think that it makes sense for them to be vague now. They have been in this meeting by meeting data dependent mode for quite some time. They do get important new forecasts at the December meeting that they didn't have at their disposal at this time. So it would be kind of odd if they now promised another cut without seeing the forecast. They will also extend their forecast horizon at the December meeting to cover 27. So then that is the much more justified, logical timing to give more guidance if that is needed.
So Jan, are you firmly in the 25 basis point camp?
I am for now. I think that the threshold for doing 50 is rather high now. But of course, they changed their minds. They changed their minds in a matter of weeks for the October cut now. So they can change their mind in favor of a 50 basis point move. But I don't think they are close to making that kind of a call with the data that we're seeing at this moment.
So with that data in mind, Germany, looking closer, is facing its first two-year recession since the early 2000s. So how much worse does this data need to get before 50 basis points is considered?
Well, I don't think that the activity data necessarily needs to get much worse, but it's on the inflation front that there are some prevailing worries on especially services inflation that need to be removed there. And those apply to Germany as well. Despite the weak activity, the labor market still is in a rather tight place. Wages are still growing, and with that, the ECB remains worried that some of the remaining services inflation could keep inflation above target for quite some time still.
So looking closer at the decision yesterday, it was unanimous from the Governing Council. So are we likely to see more cohesion from the ECB, and have the inflation hardliners been won over?
I think it would be lucrative to make that conclusion, but I do think that the Hawks have not kind of given up yet. They saw the kind of the October meeting that was not the time to kind of fight the decision, but come December, come calls for bigger rate cuts, and especially as we go closer to the neutral setting. Now the ECB is unanimous also that rates remain restrictive. Then I think that the Hawks will make another attempt, depending, of course, in the data. They're not operating in a vacuum either. So if the data genuinely calls for easier monetary policy, then the Hawks, I think, will support that as well.
So comments from ECB's Vassal yesterday as well at the meeting, adding that the markets are not dictating their moves. If the ECB are taking a more hesitant approach, could they deliberately clamp down on investor expectations, or will they be keeping markets in the dark?
I think that the ECB cares more about what the market is pricing for the next 1 to 2 meetings. They don't want to be going into a meeting with the market pricing something totally different than they intend of delivering. But then longer out, I think they're fine with market having different views, because they could just argue that, well, maybe the market has a different view on how the data will evolve going forward. But I do think they will try to guide market expectations if they are totally off, say, a 50 basis point cut for December starts to be in prices and the ECB doesn't see that as warranted, then I think they would say that more or less in straight talk.
So finally, Jan, traders are betting that the ECB will be lowering benchmark rates by around the same as the Federal Reserve by September next year. But with the Eurozone at a much weaker pace, are we likely to see an ECB decoupling from the Feds? And how could this affect European markets?
Yeah, I've been looking for that for quite some time now. Only very lately you're seeing some signs that the euro area pricing has continued to fall, even if there's been a rebound in the Fed expectations. And I think that is warranted. I don't think that the ECB will follow what the Fed does. I think there should be room for pricing to deviate as well. The euro area, the US are in a different places, so in terms of what the economy is concerned, and you should see room for deviation there.
Jan van Gerich at Nordea, many thanks for your thoughts. And that's Macro Matters. Don't forget, you can watch more videos on Reuters.com.